Today, the inevitability of cycles. Hello again, I'm Martin North from Digital Finance Analytics. Welcome to our latest post covering finance and property news with a distinctively Australian flavour. Today, I'm joined by Harry Dent. Harry is renowned as a commentator, as an author, and as a business strategist. The interesting thing about your approach, of course, is this cyclical nature, isn't it? So basically looking at long-term trends and understanding the drivers of those trends, which is a very uneconomist thing to do in a way, isn't it?
Yeah, because economists are supposed to create an economy that never has 1 to 2% inflation, 3 to 4% growth, and never has a recession. They're supposed to create heaven on earth. Yeah. And every time you have a boom, they say, you know what? Janet Yellen said it a couple of years ago before she left. Oh, we will never see another financial crisis in our lifetimes now. We fixed that. Oh, fuck. I just go, oh, shit, sell now, you know. The classic economist in 1929 said, in 1929, we're in a permanent plateau of prosperity. Urban fishing. Yeah. No. Classic thing. And this is what economists don't like cyclicality. I'm like you. I'm a realist. Everything in life's cyclical. Everything. I don't see anything that's not cyclical. So why not understand cycles and turn them to your advantage? I tell it, if I were a trader, which I'm not, I'd rather see a downturn than upturn. Downturns happen twice as fast as upturns because fear outruns greed. Greed is powerful, but fear is way more powerful. And psychological surveys have shown that people take $2 in gain to offset $1 in pain. That's what people look for in life, and of course that's why they're bad investors, because you don't get that, you know. That's my biggest thing is I almost have to hide the cycles part. People don't want to hear cycles. If I say, oh, I can project when people are going to spend money, and that means okay, that's very palatable. Especially if you say, oh, it's ordinary people spending this money. And they say, oh, that's like me. I got married. I had kids. I bought my first home. I bought a bigger home when they became nasty-ass teenagers. And then I, started saving for, I did all these things. And and now I go on cruises. I used to go on airplanes. Now I go on cruises because I'm even older and I can't stand travel anymore. So, that sort of stuff is easy to sell. But people, even my own company, my marketing people just hate the cycle thing because people want to pretend we're in heaven where there is no cycles. Right. And I'm like, no, heaven may have no cycles, but earth does. And there's no way to escape it. Yeah. People born, they grow up, they die. What's complicated about that? That's a cycle.
Sure. Yeah, it's just wired into the very nature of being, isn't it, really?
It is. Yeah. But having illusions against cycles is also wired into human beings. Right. They don't want to see it. They want the good and not the bad. They want to separate existence. Oh, well, God's the good guy and devil's the bad guy. So if I can just avoid the devil, I'm fine, And I'm like, okay, try getting the good guy without the bad guy. I've never been able to do it. So that I have to kind of hide. I think in my retirement, I'm just going to be a bashed cycle guy. But right now, it's easier to sell the demographic.
Right.
Logic.
Okay.
Because it's just human common sense. Yeah. But that's a cycle. Yeah. People spend 46, and guess what? They spend less the rest of their life. That's a cycle. And then they die.
Yeah. Interesting. So I guess the interesting thing I'm wrestling with a little bit is given the quantum of debt that we have here, households are really, really struggling. I mean, I see that through all my household surveys, so I track them all the time, right? There's very little other data that's as sort of fresh as mine. So we've got these households with effectively, their necks in the debt noose. And of course, there are concerns locally and then, concerns globally. And so people are sort of then saying, well, shit, what do we do about it, right? And it's getting to the point, I think, where it's hard to see how we can escape without significant falls in prices and significant defaults. That just seems to be the nature of it, right?
Closures and things like that, yes.
Yeah. And of course, that again is something which is pretty much unheard of here. And the banks, of course, are saying, well, our risks are fine. We haven't got very high losses at the moment, so everything in the garden is wonderful.
That's what they said in 2006, by the way, when the foreclosures just started.
Yep.
And we knew it. And our Federal Reserve was saying, well, it's just the subprime and it's containable. And
Yep.
bullshit. It's not, because one leads to the next, and the more defaults lead to more, and of course tightening credit conditions and banking lending. Yep. That's what always happens. Oh no, it's containable. It's not a big deal. It is a big deal in Australia. People are, you're right, they're way over. That's the only place they're overextended. Your government isn't anywhere near as in debt as we and a lot of European governments. Your financial sector, other than lending in real estate, is not that out of whack. It's all, like you said, it's the banks, the government, and the consumers all in this real estate casino. And everything works as long as that keeps going up.
Yep. And that
means everything doesn't work when it doesn't.
And that's precisely the point, because of course now we've got the leading indicators of price falls. We've got much tighter lending standards because they were way too loose previously, and so now the debate is, well, is the government going to do some unnatural acts to basically kick the can down the road a bit further, or not? Right? Because that's really now it becomes the critical question, because we are where we are. So the question is how to navigate. And I'm at the point where most of the people that I speak to in the political circles still don't think we've got a problem. Hence 60
Who's the guy? I had a debate, Mark. He's a major real estate guy. Mark something.
Was it Mark Boris?
Yes.
Yeah.
Yes.
Yep.
And so, he and I really had it out. And the truth is, I'm going to be right about this, but I was too early and he was right at something, So, and I remember who's the guy? Poor economist from Australia, Steve Keen.
Yes.
I met with him many years ago, and poor guy, he just had to leave. He got so embarrassed. He kept calling for a crash, and the prime minister bet him, and he lost and had to walk up a mountain or some shit, And he finally moved to London and doing some other research. But I mean, he understood bubbles. But man, there's never been a bubble like this where, well, actually the South Sea bubble and Mississippi bubble was like this, where the governments actually were pushing it to pay off their debts. They were selling shares they owned of large private enterprises, encouraging the public buy it so they could pay off their debts, and they made it easy loans. And that was really a central bank or central government engineered bubble. But this is like, I've never seen government step in and say, we're not going to let this burst no matter what. That's really dangerous, but it has worked.
Yes. Yeah,
for 9 years.
Yeah, well, the GDP numbers have been pretty good. It's blown up by household consumption, blown up by home prices, etc., etc. I chatted with Steve about a month ago. In fact, I did a post with him on my blog, and he basically said, I underestimated completely just how stubbornly the government would actually support the housing sector. Right?
I did too. Well, everything. I mean, Mario Draghi really set it off the most. He just basically told short traders, you short any sovereign bonds in Europe and I will blow your ass out of the water. And he said, we will do anything. We'll print when somebody says we'll print any amount of money to stop this deleveraging, that's never happened before.
Yeah.
No central banker's ever been that crazy.
Yeah.
And it shows me how bad it is that they would have to do that. Mm. That's what it shows me. Yeah. It's desperation to say that, but they did do it.
Yes.
And I agree with Steve. I'm like, even Paul Krugman wouldn't have forecast this much money printing, 10 years ago.
Yeah, no, exactly. So that's why I say there will be more unnatural acts here in Australia to try and kick the can down the road, because the alternative is to let things crash. And the fact of the matter is that the banks are not as strong as perhaps many people think they are, and with 65% of all their lending in the real estate sector, plus additional in the construction sector, we've got big building societies, frankly, and that's about it in our banks. So that's a big deal in terms of trying to navigate through from this point. So, but as I say, step one is to try and raise people's awareness of the fact that there are some issues, and rather than just taking the official government line, which is everything's absolutely fine. The Reserve Bank will publish their stability report on Friday. That will be saying everything's fine. There are some household risks, but they're not big risks. So I could almost tell you what they're going to say, because they're sort of smoking the same dope, as it were. So it's really fascinating just watching the difference between what's really happening and what people are saying is happening, and perception and reality. I'm not sure which is right, but I have a different view of reality to many people here.
Well, to me, it is perception, and human beings are capable of delusion as well as brilliant thinking, and delusion wins out. And this is perception versus reality. And you're studying reality. I've been studying reality for decades now. The reality is clear. I've got my most fundamental chart worked forever, just saying when a generation is going to spend more and less, and the stock market follows that. It's a 46-year lag on the birth index. Couldn't be simpler. And everything followed that until quantitative easing. Now, we're so far above that graph, it's like it's scary.
Yeah, you've talked a bit about QE, etc., etc. So I've got this theory that we didn't actually solve the 2008 problem, right? And that what we've actually been trying.
That's what QE was to avoid the problem.
Yeah, right. So that isn't that the key point, that effectively, as soon as you are effectively taking QE away, what you're actually doing is you're resurrecting all of those ghosts from 2008, because nothing has fundamentally been fixed.
Right. And I mean, it sounds like a lame example, but it's not. It's an exact example. It's like a drug addict. You can always feel better today if you take certain enhancing drugs. It doesn't matter whether it's crack or cocaine or alcohol or heroin or even a cigarette or sugar or a Snickers bar. You can create an addiction out of that, which means, okay, you can always feel better today, but then of course you come down, you feel worse. So what do? You take more. So it's the progressive habit. And then at some point, any progressive habit like that, and debt is classic, and financial asset bubbles only come out of times when you have debt bubbles. That's when they come.
Yep.
Because debt creates more money and liquidity in the system, and and the rich get richer because they own more financial assets, and that begets financial assets going up. So blah blah blah. So yeah, this is like taking somebody off of heroin, whether you do it slowly on whatever that methadone or something, or if you do it cold turkey, which is really bad, and they shake and puke and for months or whatever. There's no easy way to come down. There is no magic. Oh, now we're healthy enough. No, the only way you get healthy is you get the shit out of your system. That's what detox is. Heroin shakes out because you can't stop until you get the stuff out of your system. Then you have a chance. Your brain will still remember how well you felt on the heroin or the alcohol, so you can relapse and go back into it, but you don't even have a chance until you get it out of your system. So they're thinking, okay, we're good enough that we can slowly pull this off, and then we'll just keep growing it to no. That's exactly what you said. We never dealt with the problem at all. We have more debt in the world, another 60, 70 trillion in the world, now mostly in emerging countries, which is way worse. Would you rather have a banana Republican debt or the United States or Australia? You know which one's going to go down harder when they do. Yeah. And have more corruption and everything and overspending. So when you withdraw it, yeah, there's going to be, you're going to go into the deleveraging that you prevented. And then you can be like Japan and keep preventing it. Now, what is Japan in? They've been in a flatline economy, I call it now, for almost 3 decades. Basically, other than a few years recently, and people don't realize that's a demographic surge that nobody knows, that is the millennials who are spending more money, even if they aren't buying houses or they're being offset. But that's not going to last past 2020. Then they go back to bad trends, even worse. So we didn't solve it. We put it off. So it's going to come back. And if you keep taking more heroin, does it get easier or harder to detox? It gets harder, not easier, the more you stay on the drug. So we've been on debt since, I'd say, the early 80s, the whole world. Debt bubble. And China's gone up 64 times in debt since 2000 in less than 20 years. How can that end well? I look at economists and say, what the f is wrong with you to think that can possibly end well? That debt grows, it's 4 times the rate of GDP and grows 64 times in 18 years, and you think that can work out okay? You're an idiot.
Yep.
That's all I have to say to those people.
Yep.
I don't know why I'm talking to you. If you think that's okay, you're in la-la land.
Yeah.
That's all I have to say to them, because they are.
Yeah. And of course, Steve,
so it's exactly what you said. And the only person who'll say it here is Lacey Hunt. You here, Steve King, Lacey Hunt, people like me, John. It's a real minority. It's a small minority.
And it's interesting because Steve Key makes the point that most traditional bankers and economists basically don't worry about debt because they argue that there's an asset on the other side of the balance sheet, right? So they both go up, they both go down, but they cancel each other out, so it's not a problem. And that's the fundamental flaw which explains why we got to where we got to.
Well, let me give you one more thing, and this is what I'm indebted to Lacey. That's why he's my favorite economist. He thinks like we do and stuff, and he's realist and more towards the Austrian school, all that sort of stuff. But he's the only guy I've ever heard explain money velocity. Economists talk about it. They don't know what it is. He uses money velocity to explain something very simple. Is money in the economy going into productive investments or speculation, or is it deleveraging? So when money velocity is going up, it's showing, oh, we're not only investing, but it's going into things that create more jobs and more profits that then can sustain and create more profitable investment, and so it's in a productive phase. Well, that ended in 1997 in the U.S. and in most economies. And I've got now graphs on this for all these countries. I can put every country on money velocity. They're all declining since the mid to late 90s, all of them. Guess who's declining and the lowest? China. Guess who's next lowest? Japan. Guess which is one of the only countries rising? Australia. But Australia is rising from low levels to still below the U.S. because Australia is investing money in bullshit housing. The economy's, like you said, this real estate thing.
Yeah.
And so Australia, that shows Australia's, the strength is at least it's rising. Nobody else is that I see in major countries. Even emerging countries, most of them, big ones. But Australia is showing that the productivity of their investment has never been as high as the U.S., even at the U.S.'s worst. So that's saying that that tells me, and I just got this recently, that when this bubble burst, and real estate is the trigger in Australia, Australia's economy may show a little more weakness than you would think just from looking at demographics or other trends. Because that one stunned me because I expected Australia to be rising. I didn't expect it to still be lower than the U.S. I think it's slightly higher than Europe, and Europe's way down. U.S. is the best in the developed world, and Brazil and Indonesia are the strongest in the emerging world. India's underinvested, so it's low. It's unproductive, even though they don't overinvest. Since they underinvest, it makes all investments less productive because there's not enough infrastructure. China overinvests and has a lot of empty stuff. That, of course, any economist should be able to figure out that's not productive. To have stuff that's sitting unused. 27% of condos in major cities they've measured, not from the government, by checking who's using electricity. An objective measure. Who's hooked up to electricity using zero? Oh, I think that condo's empty. Good guess, right?
Yeah. Yep.
That shows the truth. Big cities have up to 27% empty condos. How can you have a real estate boom with that much empty capacity? You know what? Because nobody knows it's empty, and the government doesn't tell anybody.
We've got a lot of empty property here, of course, particularly in Sydney and Melbourne, in the high-rise areas. And you can walk around, for example, Docklands in Melbourne at night, and none of the lights are on. It tells you something.
Yeah, same thing. I came from Miami, and even in season, most of the condos are empty because people buy them as a second home, and they primarily buy them. Why? They don't use it that much because they're going to go up.
Yep.
You can't lose.
It's a speculative asset. That's exactly right.
Everything is at epic. This is a classic long-term top. But, of course, QE came in and everything else. But it was triggered by the subprime crisis in the U.S. You guys didn't have that in Australia. You didn't have that in Canada. You didn't have that in most of Europe. Had in Ireland, Spain, U.S. And in the U.S., I said, look, it was California, Arizona, Nevada, and Florida. That was it. 4 states had a big subprime crisis, and it brought the whole world down. Well, you can't bring down the whole world with that sort of local crisis. The world was ready to blow. It just took a match. It took a trigger. So to me, what I see happening now is you've got Turkey and Venezuela and Iran, and my God, China's got the bubble. If China doesn't blow in the next few years, I am definitely going to quit my profession because I know nothing about anything. They've got the biggest bubble in everything. They've overbuilt everything. Industrial capacity, condos, airports, railroads, office building, malls. They have the largest mall in the world is empty, and now they're using it as a tourist park. So that I think the emerging world, because in the after 2008, the big borrowing no longer came in the developed countries. We already did it. We just kind of like tried to keep from deleveraging. So debt in the United States is pretty much maybe slightly higher or flat, but in 57 trillion by last count, probably 70 by now. Almost all the new debt came in emerging countries, and a lot of it borrowed in U.S. cheap dollars. And now the dollar's going up, the U.S. rates are going up. So all these emerging countries that overexpand. And to me, Turkey's just like a mini example of China, way overexpanded. The difference is Turkey did it more on foreign borrowing. China did it on internal money creation and debt creation, which means they can control it better at first. You're still as much in debt. You're still going to have to deleverage or whatever. But so I think that this is the sign that these emerging countries are starting to crack one by one. And at some point, it's going to hit China.
Right.
And to me, Australia, I just got two problems with Australia: the real estate bubble and the banking's participation in that, and the fact that China is your biggest export partner, and China is the the marginal buyer of real estate, foreign buyer in Australia. And why wouldn't they buy in Australia? If I was Chinese, I'd buy in Australia, even over the United States or UK, frankly. But Australia, in our book, is one of the few developed countries in the world that has favorable demographics for decades to come. Everybody else is sideways at best or down, except for maybe Sweden and, Israel. I've got 6 small countries in the coming decades, and all the rest of them are flat or down. And Europe's like basket case, Japan, basket, all of East Asia, even South Korea is about to peak by our calculation about this year. And then they just, no babies, later. So Australia, to me, is really the most opportune developed country, but they have to go through this China crisis and their own, and some sort of deleveraging in real estate. Sure. Other than that, you guys don't have a demographic downturn like we do and the rest of the world does. And of course, the next boom is going to come in Asia, already is. China will not lead it like it does now. I think India and Southeast Asia may lead the next leg, but whatever, it's going to be in Asia. And I got a big cycle on that. 165 years, Asia's on top. 165 years later, Western Europe and U.S., and now 165 years from now into 2140, Asia again. And this is already obvious. But 20 years ago, this wasn't so obvious by this cycle. But so I think I think Australia is in a great position, but I do think the people there have been spoiled, especially in real estate. And I've been surprised because Greg Owen's calling me like, Harry, we got to get you out here early. We have a free fall. And I said, well, I look at the chart. It looks like 6% to me. I wouldn't call that a free fall yet. But they're so spoiled.
Yeah. Well, here people have actually, for a generation, never seen prices go other than up. Right.
Exactly. Because you haven't had a recession in 25 years. What country can say that?
Exactly right. But the trouble is that the politicians and indeed a lot of the people in the country have no understanding of what that looks like. So they get quite twitchy as soon as prices stop going up. Right. And in fact, the banking system is also built on the predication that prices will always go up. So therefore, the risk settings are very generous. And of course, that's all going to work its way through as well, which is one of the things I talk about, which is effectively you've got this deadly embrace of the finance system and the property sector, effectively highly connected. And that's going to create some pain ahead, even without any international disruption. So I take your point. There are some significant external indicators of things potentially going wrong in various ways. But we can make a mess on our own. We don't need that, right?
Well, again, we had a worldwide crisis in 2008 and 9. You guys didn't even have a recession, and your real estate didn't crack.
Yeah, correct.
So it shows, but again, I think next time that it's not going to be the U.S. and Europe. It's going to be China. It's going to be the epicenter in the end, and Australia real estate. And we have the same thing. Canada here is Vancouver, especially in Toronto, are about as bad as Sydney and Melbourne.
Yeah. On
valuations, they never had a correction in 2008-9 like the United States and some other countries did, and that now their debt ratios. Consumer debt ratios, mostly mortgages, are like almost 50% higher than the U.S. I mean, they're off the charts like Australia.
Yeah.
They may be worse than Australia for debt.
Yeah.
So those are two countries I think will get hit. But I do think this is a global thing. In this 90-year cycle we have, this is one of my big cycles. Demographics is unique because it's different everywhere. And I mean, Japan's baby boom peaked, 15 years before the U.S. and Europe, and then Europe peaked 3 or 4 years after us. And South Korea is just peaking now. I mean, it's like this rolling thing, but things like innovation and technologies, I find that to be just a 45-year cycle. Commodities, 30-year cycle, inflation, 50 to 60 years. I mean, these are pretty clock-like cycles. But a lot of these, the 30-year cycle, when you double it, you get 60 years and you get more of a Kondratiev wave, in a peak inflation instead of just commodities. You double this 45-year innovation cycle and you get what I call a great bubble cycle, that every other technology wave ends up in a super bubble like 29 or 1836 and now 2018 or 19, give or take. And those are the biggest. Every 90 years you go back, the biggest whammies came, and then it was like the Great Depression, 89% down in stocks. It's not a normal big correction of 50, 60%, maybe 70. It's 80 to 90 in these sort of things. So I think it's a global thing. And so everybody gets affected some. But I just tell you, I mean, if this happens, the first place I'd invest in the developed world would be Australia, even over New Zealand. And the first place I'd invest in the emerging world would probably be India.
Mm-hmm. Here in Australia, most people have bought property because they think it's going to actually be a huge asset, right? So it's not somewhere to live. That's sort of a secondary thing, right? It's predominantly a financial investment. So the financialization of the property sector has been one of the critical leverage points here. And of course, it's been stoked by government policy in terms of helping by negative gearing and some of the capital gains that you can get by being a property investor. And I keep saying, yeah, but remember that property ultimately is somewhere to live, right?
Exactly. and it does tend to go up. I mean, the cost of building housing is similar to the overall consumer price index over time. It goes up in value with inflation fundamentally. Yep. And the stocks can go up because earnings can grow much faster than the economy in certain industries. And even overall in a boom, it probably grows twice as fast. But real estate's not that way. So this has been a fluke. And I love Shiller's chart because adjusted for inflation, even though there's the depression, 20s and 30s when it kind of went below, and now but in this bubble where it's gone above, the rest of the time, this is very unusual that real estate would so outperform inflation, which is a really bad sign for real estate.
Yeah.
It means it's got to come back down. Just to go back down to cost or inflation adjusted values would be probably a 40-50% correction in most real estate markets.
Yeah, and I've done the calculations here. So basically, what would it cost if I were building, today, taking account of the plot and the labor and everything else, and even the amenity value, right? Compare that with where the prices are. It's about 40% in and around Sydney. So that sort of this is why I said, there's a 40% drop coming potentially, and that's just getting back to long term, right? So that's that's what people.
That's just getting back to fair value. And again, my only twist to that would be when it overshoots one way, it overshoots the other. So I would see it going down maybe more like 50, 55%, and then yes, that 40% would be your fair value. So if it does go down 50, 55, then it's worth buying, especially in Australia, because there's still some appreciation potential. It won't be like in the bubble. In Australia. I'm telling you, in the United States, I don't see any substantial appreciation potential once it gets back to fair value for decades. In Japan, never. Never. In China, it's going to be, even though they don't have positive demographics, but they still have urbanization. They're at 58%. They can go up to 85 to 90 like most countries, mature countries. That is the biggest factor driving economy. If you can urbanize, rural people to urban, that's a 3-to-1 ratio in the countries I measured in GDP per capita. You and John Adams.
Yeah.
Only two people I've talked to in Australia that do see the reality side and not the la-la side. Well, and again, I don't blame Australians because I don't know another developed country that hasn't had a recession in 25 years and real estate's done nothing but go up with no more than a couple % correction.
Yeah, no,
I mean, even we had a big correction in the early 90s in California in real estate. And of course, we got whacked 34% on average, 50 some percent in the worst places in the great financial crisis. Yeah, so yeah. I can understand people being in la la land there, but you know, nothing's in la la land forever.
It's going to come back. Really appreciate your perspectives and your views. And you know, when you're down here in Australia, I'm sure there'll be a lot of people who'll be very interested to catch up with you and hear what you've got to say, because I think your perspectives are very powerful. Okay, take care. Thanks.
Thank you, Mark.
Goodbye. Bye bye. So there you have it. A really powerful view of cyclicality and how it plays into the economics around the world. If you like what you've seen here today, please share the post and add a comment or a question. I read them all. And if you haven't subscribed yet, please do subscribe now to receive future updates. And also, if you'd like to support our work via Patreon, please follow the link below. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.